Okay, so how would I take this position? How would I take it is basically, as I said, there's two ways. Market, you can take it at the moment the signal appears with a condition, and I'll tell you what that condition is if the price is still near the zone. Meaning, if we go back in time to this one, the short, let's say the signal, the chart was like this, no signal, and then next candle appears, and it's basically at the close of the candle. So this one in here, price closed. So see this, it closed in here. So the moment you got the signal, be it on Telegram or in here, if you open the chart, is literally here. So this is considered close to the price. Why? Because this is the beginning of the box. So what I would do with my eye or just drawing tool is I would say, okay, so the box starts from here and the stop loss is at the very end of the region, not the box. You can put it in here. You can put the stop loss in here. But what I like to do to be safer, because a lot of times they go and wick that area and then go down, I would put it at the very maximum wick from here till the arrow. Okay, so see the arrow appeared in here exactly at this candle. The box starts from here. So you put your mouse in here and then go, what's the highest point of all? This is the highest point. You put your stop loss there. So you're entering at the box, the beginning of the box. Your stop loss is at the very end of the wick. So if this distance is from here to here, let's just move it here. So this is the distance. When I say the signal appeared and the price is nearby, as you can see, this distance from here to here is it's a very narrow area, but like compared to the whole distance of the entry to the stop loss. As long as it's not more than 20%, like, 20, 25, something like this, it's reasonable. So if it's like here, 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 like up to here, this area, that's good. That's fine. I can market order. I don't need to wait for price to go back and touch it. I can market. But if the signal came and the price was like somewhere here, let's imagine this close happened here, and that's already like the whole distance traveled down, I wouldn't take it as a market order. So I wouldn't just hit short because the signal came at that moment. I would place a limit order at the box. So I would forget the signal and just say, okay, I'm going to wait for the region to be tested. So I'm going to place my limit order on the box, slightly below it, like a few ticks below it, and forget it. Put my stop loss, as I said, at the very end, the highest wick, and measure the one-to-one profit. So that's the first thing I would do. Okay, like I'm trying to do one-to-one and more for risk reward. So I would do like this and say, okay, so if I enter at the box, I put my limit order literally here at the box and just wait for price to come back to it and touch it. My stop loss is here. My take profit would be here, one-to-one. That's the very basic way of entering on the ROBS.